Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings. Today, we're looking at a report where it seems like someone is playing musical chairs with the accountants and the music just stopped. Let's see what's going on. So, this is a Form 8K, a current report. Companies file these when something important happens that investors should know about right away. This particular report, dated February 26, 2025, comes from ATIF Holdings Limited. ATIF Holdings Limited, for those who don't know, helps companies, especially those in Asia, go public in the United States. It's a bit like a matchmaker, but for businesses and the stock market. They're listed on the Nasdaq, so they have to keep everyone updated on what's happening. The main event reported is a change in their accounting firm. This can sometimes be a red flag, so let's investigate why. The company announced that they dismissed ZHCPA LLC as their independent registered public accounting firm, also effective February 26, 2025. That means they fired their auditor. Why did they fire them? Well, the report says there were no disagreements on accounting principles or practices, financial statement disclosures, or auditing scope or procedures. That's good news. It suggests it wasn't due to a fight over how the numbers were being presented. However, there's a wrinkle. For the past 2 fiscal years, ZH's audit reports included an emphasis of a matter for going concern. This is accountant speak for saying there's substantial doubt about the company's ability to stay in business. It doesn't necessarily mean the company is going bankrupt, but it does mean there are significant financial challenges. This going concern warning might have pushed ATIF to look for a new auditor. Nobody wants to be reminded constantly that their survival is in question. ATIF included a letter from ZHCPA stating they agreed with the company's statements about the dismissal, which is standard procedure. This helps ensure both sides are on the same page about what happened. Now, who's the new accountant? The audit committee approved the appointment of Lee CPA LLC as their new independent registered public accounting firm. The company also states they didn't consult with Lee CPA on any disagreements or reportable events before hiring them. This is a formality, ensuring the new auditor isn't already tainted by previous issues. It is strange they didn't discuss anything at all prior to the hire, though. Before we dive into opinion and analysis, let's see how the company's stock is doing. The trading symbol is ZBAI and is listed on the Nasdaq Capital Market. Now, let's break this down. Changing auditors isn't always a bad thing, but it does raise questions. The fact that the previous auditor had concerns about ATIF's ability to continue as a going concern is significant. It suggests real financial struggles. The company might be hoping a new auditor will bring a fresh perspective or perhaps be less insistent on highlighting those concerns. There aren't any financial statements directly in this 8K, so the information is limited to the auditor change only. However, we can draw some conclusions. On the surface, ATIF Holdings faces an uphill battle. The going concern warning is a serious issue that suggests the company has significant financial problems. The change in auditors, while not necessarily negative on its own, adds another layer of uncertainty. Investors should proceed with caution and carefully consider the company's financial situation before making any decisions. It will be important to watch how Lee CPA assesses ATIF's financial situation in future filings. Will they also raise concerns about the company's ability to continue as a going concern? Or will they provide a more optimistic outlook? The answer to this question will be crucial for understanding ATIF's true financial health. The key risk here is whether ATIF can address its underlying financial problems. If they can't, the company may face serious consequences, including potential bankruptcy. The opportunity lies in the company's ability to turn things around, perhaps through new strategies, cost-cutting measures, or successful deals that bring in more revenue. Ultimately, ATIF's future depends on its ability to overcome its current financial challenges. This auditor change is just one piece of the puzzle. Investors need to look at the bigger picture and assess whether the company has a realistic plan for long-term success. Thanks for watching. If you enjoyed this video, please like, comment, and subscribe.